Magandang gabi sa inyong lahat. Ang ating lecture ngayon o recorded lecture ay tungkol sa cost volume profit analysis. Last time, we had cost behavior, classification of cost into variable and fixed. And then, nag-estimate tayo ng cost using the linear cost equation, y equals a plus bx. Remember the behavior ng cost na fixed and variable, ano? Because we will be using that throughout our discussion ng mga management accounting tools and techniques for planning and controlling. So again, ang ating pinag-uusapan po ay tools and techniques or concepts and techniques for planning and controlling bilang scope ng management accounting. Sa CVP analysis tayo ngayon or cost volume profit analysis. For profit planning purposes, ladies and gentlemen, yung interaction ng mga sumusunod, yung mga factors na ito, they affect the level of profit. Selling price, yung variable cost, yung fixed cost, yung sales mix, at saka yung level of activity, yung volume ng sales in particular. Yung volume ng sales. These factors affect the level of profit. Change in selling price, change in variable cost, change in fixed cost, change in the sales mix, change in the level of activity, lahat yan, it can affect the level of profit. So for profit planning purposes of the management, etong CVP is an important concept, an important technique sa pag-analyze ng profit and loss, of course, ano? Sa changing factor na selling price, variable cost, fixed cost, sales mix, saka level ng activity. Yung analysis ng relations ng mga factors na yan, yan ang tinatawag na CVP analysis. Used for measuring the functional relationships among the major factors affecting profits and for determining the profit structure of the firm. Ang mga common applications ng CVP analysis ay, pinakauna, break-even point analysis. Ang break-even point na tinatawag, yan po yung level of activity, excuse me, or volume of operations where total revenues and total expenses are equal. Como total revenues equals total expense, walang profit, zero profit. And at the break-even point, the fixed cost equals the contribution margin. If you are familiar, and I believe so, if you are familiar in the contribution income statement, which is derived, of course, from variable costing methodology, ganito ang format ng contribution income statement. The expenses are deducted or organized or presented by behavior. We deduct first lahat ng variable costs and expenses from the revenue or from the sales to derive the contribution margin. Yung kasing traditional na income statement under absorption costing, it presents cost by function. Functional classification. It classifies cost by function. Sa contribution format ng income statement or variable costing income statement. And for your information, variable costing method lends itself to CVP analysis. Dapat nga maunang topic yun eh. Nagtataka lang ako dun sa syllabus, nauuna ito. It's alright. Hindi naman ito first view eh. Sa first view siguro, dapat unahin talaga yung variable costing. Ang format ng contribution income statement, ganito. Sales minus variable cost. Yung variable cost na tinutukoy dyan, variable cost of goods sold and variable OPEX or variable selling, general, and administrative expense. Makukompute po natin dyan yung contribution margin. Yung contribution margin, yan yung contribution to fixed cost. Yan yung pang-absorb ng fixed cost. Yung contribution margin na yan, yan ang margin na sumasabay sa pagbabago ng volume ng activity. Increase ang sales, increase din yan, directly and proportionately doon sa change ng activity. Yung fixed cost, alam niyo naman ng fixed cost, constant in total. Ang fixed cost, yan lagi ang nakaambang operating loss. Ang contribution margin, yan yung pang-absorb sa fixed cost. At magbibigay ng profit pag na-absorb na yung lahat ng fixed cost. Ay ngayon, pag break-even point, that's the level of operation at which total cost, ang total cost na tinutukoy, yung total variable cost at saka total fixed cost, equals total sales. Zero ang profit. Kaya kung zero ang profit, ang ibig sabihin po niyan, contribution margin and fixed cost at break-even point, zero. Equal. Contribution margin and fixed cost, they are equal at break-even point. Dahil ang EBIT or operating income ay zero, that means the CM and the fixed cost are equal. And once the break-even point has been reached, the net income will increase by the unit contribution margin for each additional unit sold. Kasi beyond the break-even point, na-absorb na yung fixed cost at break-even level. So, beyond that, lahat na ng contribution margin, pupunta na sa profit po yun. Okay? Again, kung paano kino-compute yung break-even point, madaling sagutin yan. Ang ating contribution formula sa pag-compute, contribution approach sa pag-compute ng break-even point, kasi meron ding equation approach yan pero masisimplify yon in the contribution format. Alam nyo naman lahat yan? Na kino-compute yan, yung break-even point in units as fixed cost divided by CM per unit. Ang break-even point in pesos ay fixed cost over contribution margin ratio. Actually, yung numerator dyan na fixed cost, ang katotohanan niyan, contribution margin yan kasi at break-even point, ang CM ay equal sa fixed cost. Unknown ang contribution margin kasi nga, kukomputin natin ang break-even point Kaya ginagamit natin fixed cost. Actually, yung fixed cost at saka unit CM, wala namang relationship yun Itong contribution margin, yan ang directly related sa unit CM. Unit CM times sales units equals total CM. Yung fixed cost, wala namang kaugnayan yan actually sa pag-compute ng CM. Bakit siya ang nagiging numerator natin sa pag-compute ng break-even point? Kasi yun ang panghalili sa CM. Como sa ating break-even point, zero ang profit at equal ang CM at fixed cost at unknown syempre ang CM dahil kukumpitin pa nga natin yung break-even point Kaya we use the fixed cost. Which, incidentally, of course, that is the amount of contribution margin at break-even point. Kaya ang na-derive nating formula dyan ay fixed cost ang numerator over CM per unit if we are computing for break-even point in units. Kung break-even point in pesos naman, fixed cost over contribution margin ratio. Ngayon, we can expand the use of that formula sa target profit analysis, which is another application, of course, ng CVP. Kasi, dyan sa fixed cost, that is the amount of CM actually at break-even point eh. Now, if we add the desired profit in there, sa fixed cost, ang madederive natin doon, total contribution margin sa desired revenue or sa target revenue or revenue with our target profit. Fixed cost plus profit, actually, that is total contribution margin. So, the target, using the contribution approach or formula sa pag-compute ng break-even point, pwede nating i-compute yung sales with desired profit. Paano? Fixed cost plus profit. Actually, total CM yan. Divided by CM ratio or CM per unit, depende kung ang kukumpitin natin ay unit sales, sales units, or sales in pesos. Ayan. Yung profit na nariyan, dapat before tax. Kaya kung after tax yung given, or after tax profit ang desired na given, i-convert nyo lagi yan into before tax. Kaya nga itong formula eh, kapag after tax profit ang binigay, the after tax profit or AP divided by 1 minus tax rate. You convert it actually into pre-tax or before tax profit. Ayan po. Yan ang ating computation. Another application of CVP analysis for planning and control purposes is the concept of margin of safety. Itong margin of safety ay budgeted or actual sales minus break-even sales. It indicates how much sales may decrease before the company will suffer a loss. Kumbaga, well, from the word margin, kumbaga yan yung palugit. Kumbaga yan yung protection, safety net. Bago magkaroon ng loss. The greater the margin of safety, the better it is for the company. Kasi pag mataas yung margin ng safety natin, mababa yung risk na lumapit sa losses. Habang yan ay lumalapit sa break-even, baka papalapitin tayo sa possibility ng losses. So, ang margin of safety ay it indicates by how much sales can drop before losses begin. Yun po ang ibig sabihin niyan. At ang formula niyan, budgeted or actual sales minus the break-even sales. Kung ang break-even point, zero profit, at sinabi natin kanina, beyond the break-even point, lahat ng CM magiging profit. Yung margin of safety, which is actually sales beyond break-even, i-multiply mo dyan ang CM ratio, makukuha mo yun ang profit. Margin of safety times contribution margin ratio, you get the EBIT or operating income. Margin of safety ratio times contribution margin ratio, you get the profit margin rate. As simple as that. Another application of CVP analysis for planning and controlling purposes. Yung concept ng operating leverage. Etong operating leverage, ladies and gentlemen, is high in companies that have high proportion of fixed cost relative to variable cost. Kasi actually, yung operating leverage ay extent of fixed cost usage ng isang organization. The greater is the fixed cost used in the operation, the greater is the operating leverage. Lower fixed cost, lower leverage, ibig sabihin niyan. And the degree of operating leverage will indicate how many times can operating profit change given a percentage change in sales volume? Multiplier ang effect nito, klase. Minomultiply niya yung force para konting energy na lang, kahit konting energy lang, konting pitik lang, malaki na kaagad ang impact sa profit. Kung mayroon tayong leverage, mayroon tayong lever halimbawa, na simple machine, we can lift the object, heavy object, kahit konting energy lang ating gagamitin. Yan yung concept ng leverage actually eh. If we make an analogy sa simple machine, paano ba mamumove yung bigat na bagay gamit lang yung konting energy mo? O, di ba? Halimbawa, ang operating leverage factor ay 3 times. Pag ang increase sa sales ay 5%, yung 5% na increase in sales, ang impact nun sa profit, 15%. Kasi imo-multiply yun ng leverage factor natin na 3. 3 times 5, 15%. So yung 15% increase in profit, nagawa natin yun sa pamamagitan ng 5% lang na increase in sales. Dahil sa ating leverage. Yan po ang concept ng operating leverage. At yung operating leverage na yan, ulitin ko, high in companies that have high proportion of fixed cost in relation to variable cost. Ang cost structure class, relative mix ng fixed and variable cost. Sa mga companies na automated or equipment or machine intensive, mas mataas ang fixed cost nila, syempre. Mababa yung kanilang variable cost. All else equal, pag yung variable cost ay mababa yan, ang contribution margin mataas. Per unit, medyo mas mataas. Ha? Mataas din ang profitability or profit potential. Tandaan ninyo, the higher the CM, the more profitable. Kaya lang, the higher the fixed cost, the higher is the risk. Nakaambak kasi yung fixed cost na losses lagi. Well, it goes with the principle in FinMan, financial management, higher risk, higher profit. Ganun lang naman yan eh. Ngayon, kapag labor-intensive ang operation, traditional na labor-intensive, ay mataas ang ating variable cost. Particular, labor cost. Contribution margin natin, mababa eh. Pero ang fixed cost, mababa. Mababa yung ating CM per unit, hindi rin masyadong profitable ang ating operation. At least, hindi rin masyadong risky. Well, ganun nga. Higher risk, higher profit. Lower risk, lower profit potential. Mataas nga yung risk. Pag mataas ang leverage actually, pero mataas din ang profit potential. At ang formula sa pag-compute ng degree of operating leverage po ay ito. Contribution margin divided by operating income. At yung degree of operating leverage at saka margin of safety, they are reciprocal. So 1 divided by margin of safety, that is the degree of operating leverage. 1 over degree of operating leverage, that's the margin of safety. Okay? So yan po ang mga common applications ng CVP concept or CVP analysis, break-even point, target profit analysis, margin of safety computation, operating leverage, and yung isa, yung indifference point computation din, doon sa problem na lang natin i-illustrate. Ngayon, ito pong ginagamit natin na CVP technique or analysis is founded on the following assumptions or limitations. Walang pinagkaiba doon sa cost behavior analysis natin. Meron tayong inherent simplifying assumptions. Una, relevant range. Yung behavior ng fixed and variable that is valid only within the relevant range. Yung ating CVP analysis na dinerive natin doon sa ating cost behavior din actually. Kasi fixed and variable cost ang ating pinag-uusapan dito eh. Limited doon sa range of activity. So, maaaring outside our relevant range, iba ang ano doon. Break-even point na. Hindi yung ating break-even point na na-compute na applicable sa ating relevant range of operation. And then of course, kasama dyan, cost behavior identification, we assume that all costs can be separated into fixed and variable. We assume linearity. Ibig sabihin po ng linearity, we can graph the revenue line and the total cost line in the break-even chart and in the profit volume chart, may graph natin yun ng straight line. Hindi curvilinear. And to make that possible, we will assume na ang selling price per unit constant. We will assume na ang unit variable cost constant. At syempre, fixed cost constant. Kasi kapag yung selling price per unit, hindi constant yung assumption natin. Magka-curve yan eh. Tingnan nyo sa economics na mas malapit sa realidad. Sa economics, magka-curve. Meron tayong curve line na revenue line. Kasi normally naman kahit isang product lang halimbawa binebenta, hindi naman yan constant na selling price. Halimbawa, 10 pesos. There will be times na dahil suki mo or bulk yung order, you will give rebates, volume discount. So pag ginraph mo yung total revenue, hindi na straight, magka-curve na. Ganon din po sa cost. Ano ba? Variable cost. Pag ipinasok natin yung effect ng learning curve, magka-curve din yung ating total variable cost line. Or nag-purchase tayo, may mga volume discounts, rebates, magka-curve din yon. To simplify our computation, we assume that the unit sales price is constant and the unit variable cost constant, or that means the CM per unit is constant within the relevant range of activity. Also, we will assume that production equals sales to make inventories constant. Para yung ating total fixed overhead, whether that is absorption or variable costing, ay ganun pa rin ang ating makukompute na break-even point. Ang assumption dito, inventories are constant or production equals sales so that all fixed overhead will be charged to expense from every period. Next, the activity measure is assumed to be volume of units. And for multiple products, we assume that sales mix is constant. Sales mix is constant. Okay, be familiar with the assumptions, be familiar with the common applications ng CVP analysis, including sensitivity analysis or what-if technique. Memorize nyo dapat itong mga formula. Malamang mo na-memorize nyo na yun eh. Be familiar with the break-even chart. Meron pang isang chart, yung profit volume chart. And then, we now proceed to the exercises. Yung theory dyan, meron na pong sagot yan. So, mag-illustrate na tayo doon sa problems. Nadako na tayo sa problems, ladies and gentlemen. Problem number 1. We now illustrate yung computation ng... These are simple illustrations, class, but we need to illustrate. At malamang kaysa hindi, kabisado niya na rin mga simple computation tulad nito. So for TechMouse Incorporated, nandyan yung variable cost per unit at nandyan yung total expenses. Nandyan yung total fixed expense. We calculate the unit contribution margin in peso and in ratio. Well, that's very simple. The unit CM or CM per unit is selling price per unit, which is 25, minus variable cost per unit, which is 12. So, 13 per unit yung ating contribution margin per unit. And our CM ratio is CM per unit, which is 13, divided by 25. So, hindi yan mahirap ha. 13 divided by 25, that is ilang percent yan? 52%. Ano? 13 divided by 25, that is 52%. That's the CM ratio. Next, we compute now the break-even point in units. Ang break-even point natin in units ay fixed expenses, fixed cost, 589,550 divided by 13, yung ating CM per unit. So that will be 45,350. At that level, class, total CM equals total fixed cost. Kung kukumpitin mo ang total CM dyan, syempre, total sales units times CM per unit, the 45,350 times 13, o di syempre, equal dyan sa fixed cost. Di ba? Ang total variable cost dyan, 45,350 times 12. Patunayan natin na at that level ng sales class ay zero ang profit. So kung 45,350 yan, ang ating sales po ay 45,350 times 25. Total sales natin, 1,133,750. Ang ating total variable cost po ay 45,350 times 12. Yan ay 544,200. Or actually, 48% yung variable cost ratio. 48% ng 1,133,750. Ang 48% dyan, yan din eh. 544,200. So our total CM is 1,133,750 minus 544,200. Or, pwede rin, 13 times 45,350. Diba? Equal sa fixed cost yan, 589,550. Contribution margin. At the break-even point, CM equals fixed cost. CM equals fixed cost. So, ang ating CM, 589,550. Less fixed cost. Di ba equal? 589,550. Kaya profit natin, 0. 0. Yan. Itong CM na 589,550, syempre, you can compute 45,350 times 13. Kung ayaw mo nang computein na sales minus variable cost. Next, to compute our break-even point in sales. Paano ko computein yung 1,133,000 directly? Well, fixed cost. Fixed cost divided by CM ratio lang naman yan. Break-even point in peso sales. That is fixed cost na 589,550 divided by 0.52 or 52%. And that will be 1,133,750. Or kung na-compute mo na yung break-even point in units, di syempre, multiply mo lang dun sa selling price per unit, o di yun na po yung break-even point in peso sales. Next, we go to the margin of safety in units and in pesos. Paano yan kino-compute ulit? Sales minus break-even point. Actual or budgeted sales minus the break-even point. Compute tayo. Ang sales po dyan ay, it says there na 120,000 units. Marami. Sales. So, 120,000. Ang equivalent amount nun, 120,000 times 25. That's 3 million actually. 120,000 units, that's equivalent to 3 million. Ibawas natin dyan yung break-even point natin, which is 45,350 in units. Ano? Or in peso sales, the break-even point is 1,133,750. We have this as the margin of safety. Margin of safety. In units, that is 120,000 minus 45,350, 74,650. In pesos, that is 3 million minus 1,133,750. Or 1,866,250. 1,866,250. Now, to compute your margin of safety ratio, or margin of safety percentage, madali na lang computein yan eh. The amount ng margin of safety over the sales. Halimbawa, 74,650 over 120,000 units. Or it can be 1,866,250 divided by 3 million. Pareho din ang lalabas dyan, syempre. That is 62.21%. Or simply 62%. 62.21% margin of safety. So pag tinanong naman break-even ratio, in the context of margin of safety, for reconstruction purposes, pwede nyo kunin yung ratio ng break-even point over the sales. 45,350 over 120, or 1,133,750 over 3 million. Or simply 100% minus the margin of safety ratio, that's the break-even ratio. That is not a usual formula, but in case of reconstruction for unknown, baka break-even point hindi binigay, pero given yung yung break-even ratio, halimbawa, binigay, pinapa-reconstruct yung sales, binigay yung break-even ratio, tsaka break-even amount, madali nyong ma-reconstruct yung sales eh. Okay? Next, calculate the degree of operating leverage. Paano ang formula ng operating leverage uli? Contribution margin divided by operating income, or the EBIT. So, at 120,000 units, yung leverage factor kasi relative yan doon sa kung ano ang units na ina-analyze natin. At 120,000 units, ladies and gentlemen, CM, or contribution margin, equals, madali na lang computin, 120,000 times our CM per unit na 13. Di ba? 120,000 units times 13, that is actually 1,560,000. 1,560,000. Or, nandun yung sales natin kanina sa 120 million. 120 million, 3 million times CM ratio na, ang CM ratio natin, 52%. So, times 0.52. Yan din yun, 1,560,000, ladies and gentlemen. And from there, we deduct our fixed expenses. Our fixed costs ay 589,550. 589,550. So our EBIT, or operating income, is $970,450. Gagamitin natin kasi yan sa pag-compute ng ating degree of operating leverage. So our degree of operating leverage now, ladies and gentlemen, is CM na 1,560,000 divided by 970,450. That's our leverage factor. CM na 1,560,000 divided by EBIT, or operating income, 970,450. That is 1.61 times. Rounded. 1.61 times. 1.6. Now, if sales increase by 25%, by what percentage would the pre-tax income increase? Ang percentage increase in income pa sa kasong ganyan, percentage increase in income with the 25% increase in sales will be 1.61 times the 25%. Times 25%. So that will be 40. Yung 25% will bring in 40.25% na increase ng profit. 40.25. Well, pwede nyong patunayan na kapag ang sales ay nag-increase ng 25%, Ang magiging increase sa profit, 40.25. Although we will have rounding difference there kasi nag-round tayo. Pero mamaya sa mga multiple choice items, doon natin patutunayan na lang. Next, we go to target profit analysis. How many number of units must the company sell in order to have pre-tax profit na 996 for 50? Hindi yan mahirap. Gamitin natin yung contribution formula sa break-even point. Idadagdag mo lang yung pre-tax profit doon sa fixed cost. At makukuha mo doon total CM with that sales units na magbibigay ng profit. So sales units will be 996 for 50 plus yung ating fixed cost na 589,550. 589,550. Total niyan, ladies and gentlemen, contribution margin yan ang lalabas. Divided by our unit CM, which is 13 per unit. So, 996, 450 na pre-tax profit plus 589,550 na fixed cost, total contribution margin 1,586,000 divided by our CM per unit 13, 122,000 units. Yan po ang sales that will give pre-tax profit na 996 for 50. Ang break-even point dyan kasi class, 589,550. 589,550. Yung ating break-even point in units, 45,350. 122,000 minus 45,350, ang sales natin beyond break-even point, 76,650 kung gusto nyo computein ng ganon. Beyond the break-even point, lahat ng CM magiging profit. Kaya yung 122,000 minus the break-even point na 45,350, which is actually 76,650, lahat na ng CM doon, magiging profit. So, halimbawa, i-multiply natin yung 76,650 sa 13, o di 996,450, ganoon lang naman yun eh. Kahit balibalik na rin natin, talagang lalabas at lalabas yon. Ngayon, kung ang ating desired profit ay after tax na 657,800, syempre, kukonvertin pa natin yan into pre-tax profit. So, our sales units will be 657,800. Convert ko muna sa pre-tax profit yan, ano? Para pre-tax profit. Kukonvert lagi yan sa pre-tax profit. 657,800 divided by 1 minus the tax rate, 0.2, 20%. Or actually, 657,800 divided by 80%. Yan ay 822,250. So our desired sales with desired profit na 822,250 will be 822,250 plus fixed cost, 589,550. Ang total niyan, contribution margin sa sales level na yan na magbibigay ng after-tax profit na 657,800. 822,250 plus fixed cost 589,550 divided by unit CM na 13. That's 108,600 units. That is the desired, the sales units with desired profit na 657,800 after tax. Okay? So 108,600 units. Ngayon, sa problem number 2, this is multiple break-even analysis. Paano naman kapag ang ating products ay marami? Paano natin i-compute? Yung ating assumption kanina, in the case of multiple break-even, multiple products, we will assume that the sales mix will be constant. Yung ating formula na break-even point equals fixed cost over unit CM, yun din naman eh. Kaya lang yung ating unit CM doon is average CM ng lahat ng products. Weighted average CM. Kukomputin natin doon. Which is computed as mixed CM over mixed units. Ang pag-compute ng weighted average contribution margin ratio, o the mixed CM over mixed selling price. Ganun lang yun. So, we compute the weighted average contribution margin ratio. Pag given yung total CM, i-divide nyo lang sa total sales ng lahat ng product. Mixed CM over mixed sales. Ang formula dyan. So, weighted average or overall CM ratio kung minsan ang tawag dyan. Overall CM ratio or weighted average CM ratio that is computed as mixed contribution margin over mixed selling price. Now, in this case, ladies and gentlemen, ang ating mixed CM ay ganito. Diba? Kanyan? Product X, 150 minus 100, o di 50 per unit, times, ang sales mix po nila, 3:6:5, o di times 3. Wala namang mahirap dyan eh. Simple math lang ito. Plus, product Y. CM per unit of product Y, 25 minus 10, that's 15. Times the sales mix, 6. Plus, product Z, 80 minus 60, CM per unit, 20. Times the sales mix, which is 5. O, yan ang mix contribution margin. Or kung overall, total contribution margin. Kasi kung pinagsama-sama mo na yung total sales ng XYZ minus total variable cost nilang tatlo, ay di total contribution margin ang lalabas doon. Pag per unit, ganyan, you just have to mix or you just have to combine. Over all over the mixed selling price. Ang mixed selling price natin ay ito. $150 yung selling price ni product X. Di 150 times 3. Plus 25 yung selling price naman ni product Y times 6. Plus product Z, 80 per unit times 5. Sales mix. So that is the computation of our overall CM ratio or weighted average contribution margin ratios, which in this case ay 150 plus 90 plus 100 That's 340 actually, ano? 340 over 1,000, ano? Kasi 450 plus 150 plus 400. That's 1,000. So, that is 34%. That's the average contribution margin ratio or overall CM. Ang atin namang weighted average contribution margin per unit ay mix CM over mixed units. Kaya dito, mix CM natin kanina, di ba? 340 yan. 340 over, ilan ba lahat yan? 3:6:5. For a given sales ng company, ang kanilang combination ng kanilang product or mix ng kanilang product ay 3X, 6 na Y, tsaka 5 na Z. So, 3 plus 6 plus 5. That is 14, ano? Yeah, 340 over 14. Hindi yan exact. Mamaya pag mag-compute tayo, yung 340 over 14 na lang gagamitin ko. Pero, yan ay 24.29 per unit. Average. That is rounded, ano? Kaya mamaya, pag magko-compute tayo, ang gagawin ko na lang, yung 340 over 14. So, we now compute the break-even point. The break-even point in units, fixed cost. Fixed cost na 255,000. 255,000. Divided by weighted average CM per unit. Average CM. Ang ilagay ko na lang dyan yung fraction class na 340 over 14, ha? Yan, 340 over 14. Para exact. So, 255,000 that's 10,500 units. Yan. That is the break-even point. Pinagsama-sama. Break-even point for the company, ha? Hindi break-even point for one product. Kasi ganito, makinig kayo, ladies and gentlemen. Ang assumption ng ginagawa nating computation, we assume that facilities are jointly used. In that, the fixed cost na 255,000, fixed cost nilang lahat yan. Kasi pagdating sa, lalo na kung just in time ang setup, where each product has a separate manufacturing cell, there is a devoted equipment for each product. Mayroong sariling fixed cost bawat product na ma-identify natin. But of course, under traditional, assuming facilities are jointly used, yung 255 sa kanilang lahat. Ang kukomputin natin, break-even point ng company. Hindi break-even point per product. But of course, we can allocate that sa mga products. Halimbawa, i-allocate po natin yan. Yung 10,500 units. Para malaman natin ilan ang X dapat. Assuming our sales mix. Di ba ang sales mix natin 3:6:5. Ang ating ina-allocate na unit ay units. O di 3:6:5, sales mix in units. Ang fraction nila ay 3 over 14, 6 over 14, 5 over 14. So 10,500 times 3 over 14. Yan ang para kay X. which is, ilan yan? 2,250 ba? 10,500 times 3 over 14. 2,250, tama? 2,250. Si product Y ay 10,500 times 6 over 14. $4,500. Si product Z ay 10,500 times 5 over 14. So that is 3,750. Tama? 10,500 times 5 over 14, that is 3,750. Yan yung kabuuan ng 10,500 class. Ngayon, pag na-compute nyo na yan, pwede nyo na lang i-multiply yung 2,250 sa bawat selling price nila. 2,250 times selling price ni X, 4,500 times selling price ni Y, 3,750 times selling price ni Z, edi yun na yung total ninyo yun, yun yung magiging break-even point in pesos. Or, gusto nating ma-compute yung break-even point in pesos, o di, computein natin the normal computation or usual computation na fixed cost over the overall CM ratio, which is 34%, 0.34. 255,000 over 0.34. That is 750,000 pesos. Gusto nyo i-verify, 2,250 times 150 plus 4,500 times 25 plus 3,750 times 80. Yan din yun. Yang 750,000. Pag gusto nyo i-allocate yan, ayun na, 2,250 times selling price, 4,500 times selling price, 3,750 times selling price. Or, i-multiply nyo yan sa sales mix computed based on peso sales. Kanina, inallocate natin yung 10,500 na units, i-allocate nyo yan based sa sales mix based on units, sales mix in units. Kasi iba ang sales mix dyan class kung sales percentage based on peso sales. Kasi ito po yan. Etong 150 times 3, 450. Etong 25 times 6, 150. Yung 80 times 5, 400. So, ang kanilang relative proportion sa sales ay si product X, 45%. Kasi 450 over 1,000. Si product Y, 15%. Kasi 150 over 1,000. Si product Z, 400 over 1,000, 40%. So, 45%, 15%, 40%. Total 100%, ano? Kaya kung kukumpitin mo, i-allocate mo yung 750,000 gamit yung sales mix in percentage, 750,000 times 45%, 337,500, which is the same as 2,250 times the selling price per unit ni X na 150. Ganun po yun ang ibig kong sabihin. Okay? Sa mga previous na CPA board examination, hindi tinatanong kung minsan yung break-even point overall. Baka itanong, how many units of X must be sold at the break-even point? O di ganyan, kukumpitin nyo muna yung break-even point tapos i-allocate. Or ganito, may pang-shortcut dyan pag si X lang ang kukumpitin ninyo. Ganito, class. Gagamitin natin yung mixed CM to compute the composite units. Ganito yung 340, mixed contribution margin yan. Sa kanilang tatlo yan eh, pinagsama-sama. Sa kanilang tatlo. Ganito, 255,000 divided by the mixed CM, ang makukompute nyo dyan actually, yung composite units or hypothetical break-even point in units na parang isang unit lang yung product. Parang isang product lang yung binebenta. So, 255,000 divided by 340, not 350. Divide by 340. Makukompute nyo dyan, 750. Yung 750, yun ang hypothetical break-even point. Yung hypothetical na tinutukoy natin dyan, yung assuming na parang kinonsider mo na parang isa lang yung product. $750. Composite sales units. Kaso kada sales units or kada sales, parang isipin ninyo, parang packaging, bawat pack may lamang X na 3, may lamang Y na 6, may lamang Z na 5. Yan ang number of packs. At break-even point, 750. Na bawat pakete, bawat pack, may lamang 3 na X, may lamang 6 na Y, may lamang 5 na Z. O di, 750 times 3, di ba? Times 3. Times 3. Times 3 units. Yung sales mix in units. O di siyempre, 250 yan. O yun ang shortcut ninyong pang-compute, ha? Okay. Enough for that. We now proceed to problem number 3. Na-illustrate na rin natin yung margin of safety. Pero i-relate natin yung CM ratio at operating income. Our margin of safety, expressed in pesos, that's very simple, ladies and gentlemen. Sales minus the break-even point. So you have there 1 million minus the break-even point, which is 900,000. So that is 100,000 margin of safety in peso sales. The margin of safety in percentage is, that's very simple, 100,000 margin of safety over the sales na 1 million, that is 10%. No sweat. Now, how about the contribution margin ratio? The contribution margin ratio is CM over the sales, syempre. Variable cost natin, 750 1 million yung ating sales. The CM, 250. So, di 25%, di ba? 1 million minus 750. That's actually contribution margin, Total CM. Divide niyo yan sa 1 million. That's 25%. Or simply, nandiyan naman yung fixed cost ninyo na 225. At break-even point, fixed cost equals CM. Kaya fixed cost over the break-even point, yan yung CM ratio. 225 over 900, yan din yun 25%. How much is the operating income? Ang operating income dyan, class, ay pwede nating shortcutin kasi ang operating income manggagaling lang dun sa break-even, sales beyond break-even. Ang sales beyond break-even is yung margin of safety actually. Pwede nyong computein ng ganito, syempre. Sales, variable cost, 750. 250, operating income. Operating income. CM, minus fixed cost, 225. O di 25,000. Or, operating income, total familiar naman na kayo doon sa income statement format computation. Pwede naman ito. yung ating CM ratio times margin of safety. Yun din yun. Times margin of safety. O di, 25% or 0.25 times 100,000. Yan din yung 25,000 na binanggit natin kanina, class, na CM na 250 minus fixed cost na 225. Pwede nyong shortcutin na ganyan. Pag tinanong profit margin ratio or operating income over sales, o di 25,000 over the sales. Pwede rin naman margin of safety ratio times contribution margin ratio. Ngayon, pag tinanong degree of operating leverage, the CM over operating income. Ang CM natin is, di ba, na-compute natin kanina, 250,000. Although hindi tinatanong dyan, 250,000 over EBIT na 25,000. So that is 10 times. Di ba? 10 times. Or, reciprocal kasi yung margin of safety at saka degree of operating leverage. 1 over 0.25 margin of safety, 10% rather. 1 over 0.10, yan din yung degree of operating leverage. Kasi reciprocal yun, class, yung margin of safety ratio, tsaka degree of operating leverage. Kaya kahit ang binigay lang, margin of safety, compute for the degree of operating leverage, dapat makukompute ninyo. Kahit margin of safety lang ang binigay. And vice versa, of course. Next, we go to number 4. This is illustration ng indifference point. Ang ibig sabihin ng indifference point is the level of activity or operation at which the profit will be the same, regardless of the operating schemes or regardless of the alternatives. Yung magiging result ng operation, kahit magkaibang alternative, pareho. Anong sales level kung saan pareho ang profit kahit sa magkaibang alternative? Yan. Ang ating i-illustrate. Madali lang naman computing yan, huwag kayong mag-alala. Pero sagutin muna natin to. What is the break-even point? What is the break-even point? Ay, ilang klasahin. Under the two available alternatives. Sa first alternative, ang selling price 60, Variable cost per unit 34, monthly fixed cost 60. 60,000. So, alternative 1, where the fixed expense is 60,000, the break-even point in units ay 60,000 divided by the CM per unit, which is 60 minus 34, 60 minus 34, or actually that is 26. Di ba? So, 60,000 divided by 26, that is 2,308 units, rounded. Yan. Under the alternative 2, under the alternative number 2, break-even point equals, ang fixed cost naman dyan, 104,000 monthly. Equipment intensive yan, ibig sabihin. Divided by the CM per unit. So you see, our variable cost this time, 28. Bumaba kasi ang cost structure ngayon is leaning more on fixed cost. So you have there 60 minus 28. which is actually 32, ano? 60 minus 28, 104,000 divided by 32, that's 3,250. Tanggalin ko yung peso sign kasi units yan. 3,250 units. Ngayon, computein natin. Dalawang operating schemes yan, ano? Magkaibang cost structure. Ano ang level ng sales kung saan pareho ang magiging profit? Hindi pwedeng yung equation kung gusto nyo. Or, ang, shortcut na formula, difference in fixed cost over difference in CM. Or kung hindi given yung difference ng CM, hindi nyo mako-compute. Kasi kung hindi binigay yung 60 per unit na selling price, syempre hindi natin mako-compute yung CM per unit. Pero malamang sasabihin dyan, assuming selling price is the same under two alternatives, ganoon ang sasabihin. If that is the case, yung difference ng variable cost, yun din ang difference ng CM. So, difference in fixed cost over difference in CM per unit. Yan. Diyan naman, makukompute natin yung difference ng CM per unit eh. Kanina, 26, 60 minus 34. Then, 60 minus 28, 32. Which is the same actually as difference ng variable cost. Kasi constant, same selling price. But if selling price are different, talagang CM per unit ang gagamitin nyo dyan. So, in this case, ladies and gentlemen, 104 minus 60,000, that is 44,000, right? Divided by the difference in CM per unit. Kanina, 60 minus 34 tayo, 26 eh. Then, 32. So, 6. 6, ano? Divide by 6. So, our indifference point is 44,000 divided by 6. That is 7,333. I-round na natin to whole units. 7,334 units. Okay? Yan po ang indifference point. Illustrate natin pa yan. No? Meron pa tayong problem sa dito regarding indifference point para mas ma-appreciate ninyo itong isa. No? Two companies, sa item number 20, two companies are expected to have annual sales of 1 million of playing cards next year. Estimates for next year are presented. So, dalawang company, pagkukumparahin natin, ano, na magkaiba ang cost structure. Company A, selling price, 3.3, pareho sila. Cost of paper per deck, 0.62, 0.65, etc., etc. So, yung materials, printing, labor, variable overhead, mga variable cost yan, class. Fixed cost, 960 at saka 252. Ano ang break-even point for company A? Madali naman sagutin yan, class eh. Computein ninyo yung CM per unit ni company A, which is 3 minus 0.62 minus 0.13 minus 0.75 minus 0.3. Di ba? 1.2. Oh, the 960,000 divided by CM per unit, 1.2. 800,000 break-even point, company A. Si company B naman, compute ng CM per unit, 3 minus 0.65 minus 0.15 minus 1.25. 1.25 yan, ano? Di kama. Minus 0.35. That's 0.6. 0.6. 252,000 divided by 0.6, that's 420,000. Ano ang indifference point between the company or the sales units that would bring parehong profit sa company A and B kahit na magkaiba sila ng cost structure? Diba? Sinabi ko kanina, difference in fixed cost, which in this time is 960 minus 252, divided by difference in CM, 1.2 minus 0.6. Hindi 0.6. That's 1,180,000 units. Indifference point. Ayan. Yan po ang indifference point. Next, we illustrate number 19 for the degree of operating leverage para ma-supplement natin yung kanina. Car company sells 400,000 bottles of perfume each year. Each bottle costs 0.84 to produce and sell, and sells for 1. No? Fixed costs are 28,000 per year. Yung fixed cost ng 28,000, yung fixed operating expenses yan, ha? Kasi ang pinag-uusapan natin, operating leverage. Huwag niyong isasama yung fixed interest expense. Huwag niyong isasama yung preferred stock dividend. Pero gagamitin yan kapag degree of financial leverage. Sa financial management, doon nyo yan i-take up. Pero hindi yan kasama pagdating sa degree of operating leverage. So, ang ating CM per unit po dyan ay 1 minus 0.84 or that's actually 0.16. Tama? 0.16. Kung 400,000 bottles yan, ang nabenta, total CM, 64,000. Kung ang fixed cost ay 28,000, ang ating operating income, 36,000. Di ba? 0.16 CM po yun. Sulat natin. CM. Contribution margin equals 400,000 units times the CM per unit na 0.16. The 400,000 times 0.16, yan po ay 64,000. So our, ano nangyayari dito sa aking computer? 64,000. Ang ating EBIT or operating income ngayon ay, it's very simple, ladies and gentlemen. CM minus the fixed cost na 28,000. So that is 36,000, ano? Yan. So ang ating degree of operating leverage ay, or DOL, DOL, that will be CM over operating income. That's very simple. 64,000 divided by 36,000. That's 1.78, I think. 64 divided by 36. Yes, 1.78, rounded, of course. That's 1.77777. So that's 1.78. Okay? Next, dito. Sa multiple break-even, yung kukomputin natin kaagad yung kwan. Yung units sa isang particular na product. Ito po, acids incorporated produces and sells 3 major acids, A, B, and C. It sells to industrial users who use and buy these acids in the following ratio. 3:1. 3 measures of A. Ito mo, computin muna natin yung sales mix in units. 3 measures of A for 1 measure of C. So 3:ABC. And then, 2 measures of B, 3 measures of A for 1 measure of C. Then 2B for 1 measure of A. So, 6 yon, 3 times 2 class. Kasi yung A, 3 measures. Si B naman, 2 measures per measure of A. So, 3 times 2, 6. 3 is to 6 is to 1. That's the sales mix in units. Therefore, our mixed CM ay, CM na yung nariyan ha, multiply na lang natin. 3 times 30 plus 6 times 45 plus 1 times 90. Oh, ilan yan? Magkano yan? 90 plus 90 plus 270. I think that's 450. Yes, 450. The mixed CM is 450. Yan po ang mixed contribution margin. Kaya, kung ang tinatanong lang, si A, pwede nyo nang computein yan ng direktamente. Fixed cost, 1,800,000 divided by 450. Ang makukompute nyo dyan, hypothetical break-even point in units or composite units. Sa bawat composite sales, may lamang X na A, may lamang A na 3, may lamang B na 6, may lamang C na 1. You think of that as per pack. Parang ano yan, 1,800,000 divided by 450 mix CM, parang 4,000 packs. Each pack consists of a comprised 3A, 6B, 1C. Ang kinukompute natin, sino ba dito? Si A. O di times 3. O di simply 12,000. 12,000, yan po. 12,000 units. O kung gusto nyo, compute nyo, overall break-even point, wala namang masama. Ha? Diba, kinompute ninyo, overall break-even point. Para compute nyo ang overall break-even point dyan, sa halip na 450, ang denominator nyo dyan, average CM. I-average nyo, 450 divided by 10, kasi 3 plus 6 plus 1. So, 45, ano? So, ang break-even point is 1,800,000 divided by 45. O di 40,000, ganun din naman eh. I-allocate nyo ngayon yan. Ang sales mix in units, 3 over 10 si C. Di 40,000 times 3 over 10. Yan din yun, 12,000 units, ladies and gentlemen. Okay? Yan, mga actual CPA board examination. O ito naman, nung number 17, ito din po ay multiple break-even analysis. Ito naman pero ay revenues. Ang sales mix, 3 units of A for each unit of B. So, 3:1. So, kung 3:1 yan, ang ating mixed CM ay product A, ang CM per unit niya, 5 minus 3, that is 2. 2 per unit, ano? Times 3. Plus, the CM per unit of product B is 1. 1 peso. Nauna yung 1. 41 peso sabi ko eh. Yan. P1. Times 1. Yan. The 7, mixed CM. Diba? O kaya ang tinatanong, revenues of B, gamitin din natin yan, fixed cost, 280,000. 280,000 divided by mix CM. Makukompute nyo dyan, hypothetical break-even point. 280,000 divided by 7. 40,000 units na bawat unit of sales, composite, bawat pack, ay mayroong isang B at tatlong A. Di ba? O, di times sales mix in units ni B, 1. Times selling price niya, syempre, kasi sales revenue yung tinatanong eh. 6. Di ba? O, di 40,000 times 6, that is 240,000. 240,000 pesos. Okay? Yan po. 240,000. Ayan po, na-illustrate na natin lahat halos. Yung mga iba dyan ay I can leave that to you. But of course, I'm giving the answers the next session. Remind po kayo, class, sa klase natin sa weekend, Saturday, Sunday. And also, by next week, 5 nights na dire-diretso, 5 p.m. to 8 p.m. 5 nights yon, Monday to Friday. Ang topic po ay FAR. Ite-take up dyan, tatapusin ang liabilities and equity. Your lecturer is Professor Ramilo C. Gloria. Professor Ramilo C. Gloria. He will be lecturing assets and equity, or 5.0 and 6.0 of the syllabi ng licensure examination for CPA ng ating FAR, Syllabi sa FAR. 5.0 and 6.0. Sige po, maraming salamat sa inyong pakikinig. Sana pakikinggan nyo ito at i-view ninyo. At sana mapagtyagaan ninyo, mapagtisan ninyo, natapusin itong ating program for refresher. Kasi requirement po ito sa PRC. Requirement na ma-attend kayo. Nag-view kayo dapat. Thank you. And until our next recording or until our next meeting.